Hey guys, this is Mubashir and today we are going to analyze the RECL, that is Rural Electrification Corporation Limited. So we are basically going to analyze its fundamentals and technicals too. So let's start with this technical part. RECL, Rural Electrification Corporation Limited. Okay, here it is. Okay, as you can see from it is okay. Why there is no data here? There might be some network issue. That's the reason it is not showing. What's that? I think I have selected wrong. Okay, here it is. There might be some issue with that data. Okay, anyways. So as you can see, let's go with the weekly chart. It is down by the around 47% from it is all time high. So, and it is also breaking. It is previous very important support here. So yes, we can expect more downward trend at this level, and the next consolidation will be at like to this level, to 84, around, we can say round of number of 290. Okay, so yeah, but it is has given very good returns in the past, but initially it was in consolidation phase, as you can see here, and the consolidation has broken here, and from that level has gained a very huge, I mean, if you check from this level, get this, it has given around 300% approx after breaking this zone. Look at this, at the same level as which have checked. So yeah, it is down by the 50% from it is all time high. So let's see if really there is any entry point or not. Okay, let me check the details. So RECF, okay, I have already written here, Rural Electric Limited. As you can see, it is have a market cap of around 90,000 crores. So it is a like mid cap, we can say. So let's go with it is about REC is a central public sector undertaking under the Ministry of Power, involved in the financing projects in the complete power sector value chain from generation to the distribution. So there's a full cycle from generation to the distribution. Key points: service offered, loan for the generation projects, loan for the transmission project. Basically, they provide the loans. Okay, loan for the distribution projects, so short-term loans. Okay, sovereign support. So REC is a nodal agency for the implementation of various goals, schemes aimed at developing the country's power sector. Okay, so overall, it is I can say that they are related to the loans. They give loans because in order to provide electricity for the generation, for the projects so who generate the electricity, right? Anyways, let's check the P of this stock. It is 5.22, and the industry P, if we compare with the industry P, we can see it is quite too much low, 21 from 21.7. Look at this. ROC and return on capital employed is quite very low, 9.96, and where the return on equity is high, because as you can see there is a debt to equity ratio is too much high. Look at this number. Okay, this look like it is only based on the debt. Okay, there is no equity portion there. Looks like interest coverage ratio is also very low because there is too much debt, right? EPS goes for the 5 years is good, but for the 10 years it is quite acceptable, you can say. Quick ratio is good. Current ratio is also good. Book value and current price, it is around 1, right? 1.0, that's good. Average dividend payout is also very good. Excellent, we can say. Dividend yield, if we consider with the stock price, yeah, it is very good. EBITDA is also excellent. PAG ratio is very excellent. Industry price to book value, if you compare it with the price to book value of these companies also. So let's check the trend of the P along with the EPS. Okay. So if I check for the 21, the 21 around the P was 4 approx and the EPS was 25. And around now, if I talk about 23 Jan, P was 3.1 and the EPS was like 39. Okay. 24 around 10 and the 53. And if I talk about the now data, 5.2 and EPS 65. So it is quite trading at the, I can say that below average, right? That's the question. But means the company is at its lowest valuation, we can say that, right? So let's if we compare with its peers, we can see that quarterly sales horizon is good, PAG ratio is very excellent, EPS for the 12 months. Look at this numbers, very excellent, and sales variance for the 5 years is quite more than average. Profit variance for the 5 years is also good. Interest coverage is very low, I can say, but if we compare with its peers, it is good, right? Current market price to the book value is also excellent. EV to EBITDA uh, about average, we can say, but return on equity and return on capital employed is very excellent. We can, if we compare with its peers, right? There is no pledge, debt equity is very high, but as I can see that their peers also have the same ratios. P is very low, that's the very good sign. If we see the quarterly results, so we can see that quarterly results, so you can see from 10,000 to the 50,000, that's around 50% growth within the like 3 years. That's very good thing. But if we compare with the like and if we compare with year on year sales growth, it's also like in double digits. That's good thing. Employee cost remained like it is slightly increasing, right? It is fluctuating. If you consider the 5.7, then again 4.5. So yeah, it is not the, it is lowest, we can say that. Operating profit margin, look at this. What a huge margin here. That's some normal. Okay. Interest, look at this. They have to pay huge interest because they have too much loan, right? So if you compare the profitability, you can see that there is a huge increment in there, right? That's a very good, around 70% increment within 3 years only. Let's go with the profit and loss statement. Check it from 17,000 to the 56,000. Okay, at numbers. If you sales growth, if I compare it, it is also a double digit growth, right? That's very good things for the company. And operating profit margin is very excellent for interest. Look at this. They have to pay huge interest from 10,000 to 35. That's a very huge improvement in there, right? I mean, it is around 250% gain within 10 years only. Okay. So yeah, they have to minimize that because their interest coverage ratio is like too much low, right? If net profit from 40,000 or 4,700 to the 15,000, that's very good thing. So overall, the profit and loss statement is very good, but this interest obligation is very high, right? They have to reduce them. Let's go with the balance sheet. If you check the equity cap, it is quite good. Okay, reserves have been increasing exponentially. That's very good. Borrowings, if you see that, look at this, from 1,26,000 to the 5,16,000, in of which the main stream is long term only. Look at this. Okay, other borrowings also are there. Also there, trade payables is very less. Fixed asset. Look at this. They are not as much expanding as compared to they are taking the loans, right? Building. Yes, they are continuously investing for the land building, but not that much as per their as they are raising the capital from the market, right? Look at this equipment is other computers, furnitures, all things are increasing, but not as much their loans, right? Capital working progress, if you see that there is very less capital working progress. Investment, they are doing investment, right? That's the thing. Now, compare the cash flow with their sales. If we check 37,000, 57,000, and 30, and is around 40, 40, 80, and around 130, 1 lakh 33, 1 lakh 30 crores approx within 3 years. Okay, 1 lakh 30. Okay, this profit before tax is 30. So here it is 13,000, 17, that is 30 and 50, 50,000 crores around. They have generated 50,000 crores, but if you see this number, it is in negative. Let me see the reason. Loans and advances. Okay, this is the major reason. So yeah, company have to capitalize their loans and advances because they are creating very big concern in the company. Let's see cash from investing activity. As I told you, they are actually investing for their fixed assets and all buildings and plant building, property, plant and equipment. Proceed from the debentures to get these numbers. It is too much high. This from the borrowings. This is also too much high. Interest paid. Okay. Dividend paid is good, but not as there is too huge. There is a huge risk involved because of this interest obligation. Okay. Debtor days is very less. Let's see the promoters. Confidence to the company. We can see there is no change in the promoters holding. FII is decreasing their stake in the company. You can observe here. From this level, you can observe that. DIs have like steady, we can say, holding. Government has slightly increased their stake. Public have also increased their stake in recent time. So overall, if I would say, let me check if there is any resignation happening. No, there is no. Let's see if there is a positive rating by the Christian or not. But if overall, I would say that this company is not good for your investment. I mean, there is too much loan in there. I mean, they have to capitalize that, right? They have to capitalize their interest, right? There's a huge interest obligation for that, right? Company, okay, continuously getting a triple A. That's a very good sign. But yes, I would suggest you to avoid this stock because I personally don't prefer this stock to have too much debt in there because we know that the uh, biggest fortune bank become banker after taking too much loans, right? So thanks for the watching. Have a nice day.